So when we raised the 32, we were still operating with the mindset of 6 months from now, we're going to be raising a huge round. And so we, looking at what really happened with the industry, we decided to adjust our plan so that we could reach break even without needing any additional cash, which was not how we operated since founding the company. When we raised our extension, we had less than 2 months of cash last year.
Lucas, it's a pleasure to have you as my guest. Welcome to the J Curve.
Thanks a lot. Thanks for having me.
Thanks for being with me today. And I would love to start with a little bit on you and talk about your initial path into the entrepreneurial ecosystem in Latin America. So you worked as a consultant and then you pursued your MBA from HBS. And then instead of staying and working in a consultancy or Wall Street, you made a pretty conscious decision to come back to Latin America, come back in Brazil, and become an entrepreneur because that is something that made and maybe still makes you happy.
Yes, exactly.
So, can you elaborate a little bit about that move in 2011, 2012?
Sure, let's do it. So in 2008, I was a consultant with Bain Company, and I decided to apply and pursue an MBA abroad. Back in the day, I didn't know entrepreneurship was actually a career, especially in Brazil. Many of the VCs that are really well established here now didn't even exist back in 2008. So I applied in 2008, joined HBS in 2009. And when I got there, I didn't want to go back to the consulting world. So I started exploring opportunities in different industries. And in the United States, even at HBS back in the day, it was a big field inside the school. There were multiple people exploring opportunities. There were professors that were helping students who wanted to start something from scratch. And it was when Groupon was growing a lot there in the United States. And during 2009, we started working, my partner and I, we started working on a Groupon clone to be launched in Brazil. It didn't work. A few months after we launched, there were literally thousands of players in Brazil. There very little barrier to entry, and it didn't work. The good thing about that is that I really enjoyed, and I said, hey, even though Brazil doesn't have a strong, solid tech ecosystem right now, of course, it's going to happen at some point in time. And I loved the experience. Those 18 months working on my own startup, I loved it. It's the reason why I decided to go back to Brazil and try to build something else. In the beginning, I didn't have a great idea. I had the PowerPoints. I tried to raise from some funds from Monashees, failed. And I ended up joining Groupon because it was the opportunity I thought got me closer to the entrepreneurial experience. Even though it was already huge when I joined Groupon, it was already a listed company. But I thought it would get me closer to the tech ecosystem. And after 1 year, I think, in 2012, I was still trying to raise from different investors. I had a good connection with Monashees. They said, we're not going to invest in your PowerPoint right now, but we have just invested in Viva Real. And Brian, the CEO, is looking for someone to join the executive team and help expand the business. It was working in São Paulo. And so the goal was to help expansion in Brazil, in other cities. I decided to join. I thought it was going to be just a short experience, just again, a stepping stone towards the goal of founding my own company, but it worked really well. And I had a great relationship, and I still have with Brian. We worked for almost a decade together. And from day one, Brian had this great managerial approach to empowering people and really pushing them to become entrepreneurs themselves. And that was what happened with me there. I eventually took over as CEO. So it was a great experience. In the end, I really felt like it was also my business.
So, when you met Brian and Viva Real, What made the company interesting for you? What made you make this decision and join the company?
I was not very experienced. There weren't many opportunities in the tech ecosystem. So it was not that I fell in love with the opportunity itself, with the industry. I had no experience with classifieds, tech classifieds, or real estate. I had this one objective, which was getting closer to the tech ecosystem. And the main reason why I joined is because of Brian himself. When we first talked, he knew I was working for Groupon for a year. He knew I was pitching to Monashees. He knew I was like very anxious about my own career. So I was from day one very open about, hey, maybe 1 year from now, I'm not going to be here. And he said, it's fine. Maybe you're going to be a stepping stone for Viva Real as well. So we have an agreement. That's great. So let's talk maybe 6 months, 1 year from now and reset expectations. And I said, great. We did it 1 year after. And I said, well, it's working for me. I said, well, it's working for me as well. Maybe let's extend this commitment. So great. And then 12 months later, we had another conversation. I said, I'm fully committed for the long term. Count on me. And he said, great. And it was when we started working on the succession. I think after this commitment from myself, I think he also felt great. At some point, I'm going to go back to the US. He's American, living in Brazil, living in Latin America for multiple years. Well, I think you're going to be the one. So let's work on it. And we started working on that plan. That was it. So it's not that I was in love with the opportunity. It was really opportunistic.
But your dating period was pretty successful.
It was,
and
yeah.
it led to a pretty successful marriage.
Yeah.
So when you reflect on that experience of essentially running Viva Real, running it through the acquisition with ZAP, and running it through the acquisition by OLX, what were your key learnings out of that experience that help you navigate Nomad today?
So I joined Viva Real in 2012. There was this merger with ZAP in 2017. And then we sold the business in 2020. After we signed the sale, there was a antitrust period. So there were a few months between signing, getting the approval, and closing. And right after we signed, it was March 2020, the beginning of the pandemic. So everything changed at the same time. No one knew what was going to be the impact in the industry. A few industries took advantage of the process. Some suffered. I think we managed well. We didn't suffer that much. At the same time, we moved to this remote world. We had already signed the deal. We were not going to make investments, given that we were waiting for the approval. We would not make big bets as the company that was selling the business to OLX. So as a CEO, there was not much for me to do. I couldn't fire people. We couldn't hire people without OLX approval, right? Like big positions, it was part of the terms. We couldn't make big investments. So it was a time for me really to reflect. And during that process, in this self-reflection mode, I looked back and thought, when was I the happiest? And it was in the early days. And why was I the happiest in the early days? And of course, it's very personal. I'm really execution driven. I really like frontline exposure. And when you grow the company, it's harder for you to get closer to the front line, especially after a merger. In our case, we were 600 people at Viva Real, 600 people ZAP. So when I got to this moment, what am I going to do next, right? Am I going to go to the other side of the table as most of my friends who sell their business and become investors? Or what should I do? And okay, I understood I was the happiest in the early days, not only because I liked the frontline execution, but also because of the team. And Brian, who was in the beginning my direct manager, right? The CEO of the company, but eventually my partner. I think the way we created this relationship, the governance, how we created this strong team throughout the years, I think that was what contributed the most for me to be engaged and happy. And so back to 2020, what am I going to do next? And I started exploring what's going to be the crazy different industries that I know nothing about, where I can really engage and learn very basic things, and with people with whom I can really get connected and who somehow have very similar objectives in life. Those were the conditions. And I think I managed to, today, after about 3 years with Nomad, I think I managed to put those conditions in this formula. And of course, there's a lot of serendipity because you have to find people with shared interest, and it worked. So I think that's it.
So Nomad was launched in 2020 by Patrick, who is one of the co-founders of iFood, and then Marcos and Eduardo, and you joined in 2021. How did that partnership come to be between you and the founders?
So I started working with them in 2020, even though what's publicly disclosed is 21. We started working together even a little bit before launching the business.
How did you get to know each other?
Quite interestingly, who told me that Patrick was working on this opportunity was Monashees, the same fund who had introduced me to Brian back in the day. We have a very, very good relationship. Monashees was on the board of Viva Real since the very first day, and I'm very close to them. I knew Patrick from his time at iFood. He's the founder of iFood. He has been also in the industry even before I was, right? So he was with the business since 2000. And so when I joined Viva Real in 2012, the main responsibility was expanding the sales operations around the country. And iFood was one of the few companies that were also expanding sales and ops around the country. There weren't many companies back in the day. 2012, the bank didn't exist. Maybe Logi was being founded. 99, I think, didn't exist, or maybe it was also being founded around 2012, 2013. So there weren't many companies. So we had this connection, exchanging notes, and we got closer. And that was it. Monashees, so I knew Patrick, but Monashees was the fund that said, hey, I had told them that I was exploring potential co-founders, potential opportunities, and they said, Patrick and his co-founders, they are just raising now the seed, and they're talking to us, and they're looking for someone to join the team and to be the CEO of the company. And maybe it makes sense for you. Maybe that's the setup. Maybe those are the conditions that you were looking for. And then we started exploring. I had this transition with OLX because we didn't know when the closing was really going to happen, because there was the antitrust process happening with the government entities responsible for those assessments, which is called CADE. So we didn't know when it was really going to close. I had to wait for that transition. And so I officially joined in early 21, but we were working on it before.
What did you like about the idea of Nomad? In 2020, what is it, like 40% of venture capital money invested in Latin America went into financial services. So the sector was already pretty hot, right? And there were a bunch of players emerging. What did you like about the idea of Nomad back then that prompted you to join?
So Patrick himself was in a very similar moment, I would say, in life, right? He had already a great experience with iFood, built a huge business. And so he was just looking for the next 10, 20-year journey. What's going to be the next big thing? It's less about building wealth. It's less about we have to sell. It's more about building something that fulfills your own, that it's a little bit of your gene of builder. When you're a first-time founder, when you don't have wealth, when you have not built something before, there are multiple things that you're looking for. Oh, building a big team, or getting some kind of media exposure, or getting money. And most of those things, both of us had before. So I think it's more about building a business and being happy by creating this new legacy. I think that's what excites us. And we shared those expectations. And I talk specifically about him because I knew him before. The other co-founders, Marco is one of the co-founders. He had already left the day-to-day operations, but Eduardo Haber, he is in the day-to-day operations. He's still there every day. So the three of us are there. And Eduardo had an experience in the financial sector. The parallel is very similar. So he had also built his business, huge business. He had already had his exit. And I think when you get to this point in your life in which you build some, I think, convictions, you have traumas, there are things that you don't compromise, and you become more mature in terms of what are you really looking for? Like what do you want in this business? What's going to be your participation? What do you want to get out of it? And I think we were all very committed to building this big thing that didn't exist back in the day, like the global financial services as an industry, as a category, was something new.
So when you look at the last 3 years of journey with Nomad, what were some of the most exciting things in terms of managing the growth of the company that operates? If you put things into perspective, when we talked about that before, when you ran Viva Real and ZAP, it was a blue ocean, right? There was no competition. As you mentioned before, your expectations around exits were IPO and not a merger and acquisition. And now when you look at Nomad, you operate in the industry that is really, really attractive for competitors because the pie is really big. It's really exciting. It attracts venture capital dollar. It attracts incumbency. It attracts more funded other neobanks. So how do you think about that?
Yeah, having prior experience is always helpful, and it's never going to be enough. The challenges you're going to be facing are going to be different, but it's very good to have the confidence that helps you make decisions quicker. And also, it's kind of a self-fulfilling prophecy. When you encounter the same challenge again that you had before, you make decisions with less effort and also with less doubt. And it just gives confidence to you and the team executes faster. So those factors compound and creates this spiral effect, I think. So, quick example. I remember I had issues after the merger of Viva Real and ZAP, and we had at Viva Real a specific compensation structure, and with ZAP a different compensation structure. So Viva Real, we only had fixed salary plus equity, long-term incentives, and ZAP had fixed salary plus short-term bonus, cash bonus. And we had to combine those two compensation structures, merging teams, and it creates multiple challenges, legal, but also managing people's expectations, all that stuff. And it was very hard. In the end, you have to harmonize, right, all of those incentives so that people feel comfortable and engaged. So here at Nomad, we decided not to have a fixed bonus, a cash bonus as part of our compensation strategy. And you can imagine, we have been growing. We have over 300 people now, and we keep growing. So we not only promote internally, but we also bring senior leadership from outside. And there's always this question, why? So how are you going to compensate for in terms of employer value proposition? And it's very easy for me to say, we're not going to have a cash bonus. We're not going to have that. And I'm happy to give my reasons, happy to get people to think about pros and cons that such compensation strategy causes in the day-to-day, in culture, in expectation management, in how do you manage a company that is growing over 4 times revenues in a year. So all of those specific characteristics of the firm in our context, they help us create a very clear understanding why this specific, very traditional process, incentive, doesn't work for us, with pros and cons. And this is maybe it's very specific and it's just one example, but like that, there are many other that I'm very comfortable making that
Okay,
decision.
I would love to talk about that because I think this is the specificity that is really relevant. So, how do you compensate for that when you attract C-level? I mean, within the company, people who were raised based on this corporate culture, you understand that that's what they're signing up for. But when you attract C-levels from the outside into the company, how do you compensate or how do you position them this zero cash bonus policy?
So first off, when we think about compensation, you cannot look at it without taking into consideration all of the other incentives, monetary and non-monetary ones. That's the first thing. And I know it's a very sensitive topic. We know everyone works for the incentives they make, both monetary and non-monetary. But whenever you look at a compensation survey, I have never seen a compensation survey that takes into consideration non-monetary incentives. So whenever people say, oh, let's look at this survey, it's a huge list of companies, different industries. You have enough data to really focus on those that are the best comps. You can really extract outliers. You're going to see what really makes here the top quartile, bottom quartile, whatever. I have never seen one company that has, for example, a indicator that measures how you treat your employees fairly. For example, what is your maternity and paternity leave incentives? So it's very hard for you to create a formula to rationalize what should be short-term compensation, long-term compensation, and all of the other incentives, especially equity, because equity, it's very hard for you to properly assign value, and people have different risk tolerance. And so people would also confer different risk factors to that specific part of the compensation. And so it's just very hard. And maybe I'm here running in circles, but I'll be again very specific. In our case, we have from the beginning 6 months, both maternity and paternity leave, period. And I think that's the best incentive you can have in the company. And I'm not saying other companies don't have, but how do you compare that versus having a 4 monthly wages as a cash bonus every year versus having a first time father who's going to have 6 months at home with his family helping the mother of his kid raise the baby, you know? I even get anxious when I talk about it because it's so much more when you think about compensation and about incentives. And I know it's hard to communicate and to get employees, both junior and executives. I know it's hard, but I really believe that compensation cannot be evaluated without all of the other, both monetary and non-monetary incentives. Paternity, maternity leave is one thing. Just the culture and how we believe we treat employees, it's another thing. So there are so many aspects. And
So let's talk about the culture. You mentioned something really interesting. So you are managing a company that grows 4 times revenue year over year. How does that impact the culture and how do you scale the culture?
that's another, I would say, learning that I have with regards to culture. It's always an idealistic view of your culture and not necessarily a existing culture to which 100% of the individuals adhere to it. So when you have that in mind, you're always working to get the company towards the envisioned culture. So it's really fluid. When you have one value, it's a broad definition that really needs supporting evidence for what this, whatever, the more traditional values, people. What does people as a value mean, right? It's never just people. There are multiple facets of that specific value that you have defined and stated, and it's on the wall. So it's broad. And whatever you have as supporting evidence for that value that you want the company to adhere to, it's idealistic. So when you have that in your mind, as you grow, you keep creating processes and you keep promoting what that idealistic value culture is, and you get more tolerant, I would say, to what is really the reality, which is you have new people joining the company. They're, of course, not 100% adherent to whatever you think is the right behaviors, cultures, values. And it all goes back to lead by example, right? Walk the talk. I have this realistic approach to culture, which is you're never going to have 100% of the individuals behaving in that way. There are deviations. They are idealistic statements. What you cannot have is that deviation getting farther and farther from the goal and not addressing those as they happen. Of course, it comes from leadership, from example, and all that stuff. So that's kind of the broad answer. But then I think as you grow, the challenge is to really dedicate some time and to convey to the whole organization how important those expected values, behaviors, the vision is. And as long as you as founder, CEO, executives, leadership in general is committed to that goal, I think it's kind of natural. Everything unfolds after the processes, the ceremonies, the forums for you to reassess.
If you were to give the example of the North Star in terms of the value, or maybe single most important value in Nomad, and how this like abstract environment operates around this North Star, what would that example be?
In terms of the value itself, one of those, I think the one that really represents what the founders thought about the company from the beginning is one that we say it's tem que ser legal. And I'm a huge enthusiast of.
Wait, what does it mean in English?
I'm going to translate and I'm going to give more details. But tem que ser legal it's something like it has to be cool. It has to be fun, fine, great.
Oh, que legal.
Yes.
Okay.
Yeah. In Portuguese, tem que ser legal. Like it has to be. It has to be. Otherwise, I wouldn't be here. I, Lucas, wouldn't be here if it weren't for me to be happy with what we're building. And with my experience, with the founder's experience, we don't like to have those statements that are like one word or
like value statements written on the wall.
We have that. We have 4 very specific ones, but we don't like people, processes, team. We like them to be more specific. And at the same time, even if you have a very broad concept like people, it's not people, right? It's something more specific in whatever company. So you have additional supporting examples, a playbook, a handbook that helps you convey the message to the whole organization. So in our case, we have tem que ser legal. So of course we have multiple examples and data and processes and ceremonies that help us convey what that means. And the tem que ser legal, which is it has to be cool, it could be interpreted as, oh, this has to be fun. The environment has to be fun. If it is, it's a consequence. It's not the reason why we have that value. That value is because as founders, we are here because we want. Because Patrick could be doing whatever he wanted with his experience. Gabriel, he's also part of the founding team. He's the CTO. He was the first tech employee at iFood. He built it from scratch, up to tens of millions of orders. And then when he left iFood, he could do whatever he wanted. And I felt similarly, we could do whatever we wanted. So if we are here, it's because we really want. So we have to make this place something that we're like, that we're proud, that we're happy. And it's not that simple, because what makes me happy is not necessarily what makes Gabriel happy. It's not necessarily what makes Patrick happy. So we have to converge. But in the end, it is really building something big, building this legacy, and really enjoying the craziness, which is building something new, hyper growth, which is hard. So that's it. So when we think about tem que ser legal, is you have to be happy and comfortable with the craziness and the very fast pace that we have, with the uncertainty, with the ambiguity, and multiple things and multiple conditions that are not natural, that are not comfortable at all. The cool for us is hard. So
So
that's
let's
it.
talk about hard fundraising in a bear market. So you've just raised $61 million in the round led by Tiger, with some of your prior investors participating in the round, which I think is an excellent news for the market, because everything that you hear about growth investing in Latin America is pretty pessimistic and pretty depressing. So you managed to pull this off. But I want to ask you, what did you learn out of this process of fundraising at the down of the market? And how was the process for you in general?
Yeah. So first off, it was definitely harder and it was longer. Last year in 2022, we raised $32 million in a process that started in the end of the first quarter, and we closed it in May. So it took 2 months, 3 months,
Two
something like
months
that.
for over $30 million. That's
Yeah,
pretty fast.
it was good. And let's remember that in the beginning of 22, it was already a different market. I think second half of 21 was when it was still very good. And then the industry started to get a little bit skeptical by the end of 21. Early 22, it was, hey, something's weird happening. Public markets were suffering. Second quarter 22 was really, really hard. So we started the process in first quarter 22, end of first quarter. We closed in May. It was already hard. Then fast forward 23. We started the process at the same calendar period, end of first quarter. Why? The company was launched in November 20. So we didn't have a long life and a long experience. So we wanted to get the most out of our data. So we decided to wait until first quarter 21. We knew we were going to get growth going, improved margins, everything. So end of Q1, we started the process and we closed now, just announced. So August 23.
How was it different besides the timelines?
I think up until Series A, the fundraising process is heavily driven by founders. Founders, connection with the funds, how big the opportunity is, but less about proving the business. When you move towards Series B and C, I think when funds start to look at the data, at the model, and there is more scrutiny around
Metrics, unit
growth,
economics.
projections, all that stuff. So from my experience, even before with Viva Real as well, I think Series B is the most complicated one. I would expect it to take a little bit longer. But in this context, we felt like there was a lot of investment from the funds in like understanding the details, a lot of data requests, much more than we were expecting. And and quite interestingly, a lot of learning for us as well, because there were so many conversations and so many follow-up questions and so many data requests that many of those analyses we didn't even knew. Like I remember some of the questions were like, why does this specific segment of your customer base has this specific behavior? I said, well, I don't know. I had never taken a look at from that perspective with those lenses. Like this is something new. So I think the main difference in terms of the process itself is more scrutiny. Also, when you get to the Series B, Series C, of course, comps are closer to equity markets. And in the beginning of 23, in the beginning of this year, when we started the process, the market was still, public markets were still suffering a lot. So multiples were really low. So I think those were the contexts, like the two specific things. One, multiples are low. Deal with it. Second, we're going to invest more time. And so it's hard for you to create scarcity because everyone knew deals are not happening. So everyone has time. The market has turned. It's not a founder's market anymore, it's an investor's market. So our approach was, when we made the decision, we knew we were going to reach break even now in the second half of the year. We knew, given the leading indicators that we had in the business, that we were going to see multiple indicators performing better, both in the second quarter and third quarter and fourth quarter of the year. So we were really confident with, one, what we're going to deliver in the short term, and two, the projections. So we said, let's start.
In terms of months of revenue, what would your advice be to the founders? Because a lot of growth founders from Latin America are really worried in terms of when they need to start raising in terms of the months of revenue. So what's the range that you think is comfortable?
I think it's very subjective. On the one hand, I would say, why did we start this business? Like, why does, personally, this value tem que ser legal? Why do we have that as such a strong value? It's because we want to build something great. It's because we want to build a legacy, and it's not meant to be easy. And it's very easy for me to talk about that right now after raising and everything that we've done and in a very comfortable position. But there are some founders that I talk to, and that I really think that they are better off making bigger bets because that's what's going to fulfill them. And I know maybe that's not the approach that is being taken by 90% of the founders, and that's not the approach recommended by 99% of the funds. But I think that the investors, especially those who supported Series A founders, really invested in the founders themselves, and you have to support whatever the founders decide. I think that's one approach. At the same time, you have to make decisions with at least some rationality, understanding what are the odds. And I think that whatever decision you make, you need to understand what's the downside. And you have to be comfortable if you have 12 months of runway now. And if you think that you're going to be 6 months from now really delivering what the industry is valuing as a great business, as a potential Series A, B, C investment down the road, I would support the riskier approach. I'm not here to make a point just to be kind to investors or to my fellow founders. I think you have to always take into consideration why you started the business at first. And maybe it was to build something big. And just turning your business into a low growth business, maybe it's not something that you want to do, and maybe you're not meant to do that. Maybe that's not what you wanted to do at first. So why are you going to do that? So of course you have to do it in a structured and rational way and think about the downside. But I would just argue, I would make that other point because that's not what usually people say.
I agree with you. And funny enough, those investors who end up making bets when the whole industry is more reserved, they normally end up winning bigger. When you just think about the yields and when you think about the fund's return, there is a correlation of scarcity of capital, time to decision making, and quality of companies. And those companies that end up raising, they end up growing faster and more creatively than others, and that requires a certain level of risk. So I totally understand what you're talking about.
Yeah.
I want to talk about a very sensitive topic for a lot of founders, and I'm actually really happy we're having this conversation because you've been through the process multiple times, the process of layoffs. So you had to lay off people back in your days at Viva Real and ZAP, and now you had to do certain cuts in Nomad just recently. So what would your advice be to the founders, or several pieces of advice in terms of how to navigate this challenging process, both in terms of the firing itself, but also in terms of managing your own emotions and managing the team that stays?
Yeah. So it is definitely the worst part of being an entrepreneur. It's managing layoffs. It's really hard. And it's the CEO's responsibility, regardless of what happens with the market. Having said that, no playbook, but always think twice before growing the team, and easier said than done. You mentioned we about a year ago in August last year, we had this layoff and we had to let go lots of people. We were growing a lot in the beginning of 22. We hired a lot of people, and then we raised in May our extension. It was a big round. And at the same time, even though we had this very aggressive growth plan and confidence, we were still operating with the mindset of 21, which is invest a lot. You're going to be able to raise again soon. So when we raised the 32, we were still operating with the mindset of 6 months from now, we're going to be raising a huge round. And so we, looking at what really happened with the industry, we decided to adjust our plan so that we could reach break even without needing any additional cash, which was not how we operated since founding the company. When we raised our extension, we had less than 2 months of cash last year. So in May, we raised. We couldn't make it till the end of July. Yeah, we couldn't make it to the end of July. That's how we were operating. And so we decided to make an adjustment to our approach. We were still comfortable with some big investments, like the VIP lounge that we launched in Guarulhos. We decided to keep that investment because in our understanding, it was going to help us accelerate growth. At the same time, we made decisions to cut a few other investments, and we made a decision to make the layoff. So it's very hard. There's no playbook, but I would always advise that expansion comes with inefficiency. It's very hard for you to bring new people to the team and to maximize the output that those people bring, right? Like if you hire a new manager, if you bring people to a team as a peer, you're always going to have to reassemble the team. You're always going to have to rethink about responsibilities. There's always going to be inefficiency. So think about that up front. That's maybe one advice. The second is do earlier than later. I think I haven't met anyone who thought about that differently. Whenever you make those hard decisions, sooner than later, it's easier because you start rebuilding sooner, right? And the main advice, I think, the main learning that I had multiple years ago and that I still have in my mind is if you have to do it, prioritize those that are staying at the company. And if people say, oh, that's such a harsh approach, if you're prioritizing those who stay, are you not prioritizing those who leave? No, it's the opposite. Because those who stay, they still have connections with those who leave. And for you to prioritize those who stay, you have to treat the best way those who are leaving. So think about those that are staying and think about what is going to make them stay engaged and happy and committed to the firm after they see their friends leaving. And if you optimize for engagement of those who stay, you're definitely going to take care of those who are leaving as well. So having that in mind helped me navigate the process in the best way. But then there are multiple, I would say, specificities of how to handle the process. And especially in the remote world, it's harder. So how are you going to communicate? So again, going back to think about those who stay, I think it's the best way for you to handle it and treat people fairly and eventually get ready for rebound.
How did you handle your emotions during the process? Did you have any support system. It's a very challenging process for your own mental health because you're there to build something and you're building it together with people who you think are capable and are important. And here, the decision that you have to make, it's not driven by your own desires, it's driven by the market environment, it's driven by cash on the account. It's a very different ways of looking at the decisions.
Yep.
What was your process?
I don't think I'm a good example. I don't think I do it very well. I'm talking about how do I handle my emotions in general. I don't think I'm a great example. Since 2018, after the merger of Viva Real and ZAP, I've been working with therapists and psychiatrists and everything since then. And I think that's evidence for me not being able to manage it well. If I had managed well from the beginning, I would probably be more comfortable with less external support. So I'm definitely not an example. I think I work longer than I should. I think I still, broadly speaking, do not invest a lot of time in what is well known as elements that help you manage your mental health. I do exercise, even though I travel a lot. I internationally, I still manage to exercise. I eat well, but I still think that I work a lot, and I think it's definitely not helpful.
Can you actually manage a high growth organization that operates in a highly competitive market without working a lot or just following this advice like 4-hour work week or seeking for work life balance? Do you think it's even possible?
I think there are techniques that could be helpful, but I don't know any founder who has built successful firms. If you take this extractor, I don't know, if you talk to the founders of the Brazilian unicorns, I have not heard from any of them that they have been working 9 to 5, 40 hours a week. It's hard. And maybe there is this correlation, not causation, but this correlation between founders who actually like to work long hours, who are deeply committed to what they're building. The problem is that it's hard for you to notice in the short term the impact of such investment. So eventually, over time, you realize that you're getting exhausted, fatigue, all that stuff. So I think it requires a lot of discipline. But if you think about examples, I haven't seen examples. It doesn't mean that they do not exist, but I think it's very hard for you to navigate the hyper growth stages and the multiple priorities and challenges, especially during hyper growth stages.
Everything comes with downsides, right? So you better be loving what you do, then downsides are perceived as part of the ride, I guess.
Yeah.
Okay, so I'll ask the last one before we move to the rapid fire. You mentioned that you and the founders are all aligned in terms of building a legacy and building something really big. So when you think about the short term, midterm, long term future for Nomad in terms of competitive modes and also in terms of the key trends, and that could be industry trends, it could be macro forces, could be technology forces that will impact the future of Nomad. What are those?
Sure. If I were to talk about one competitive mode, the number one is the execution focus. As you said, our competitors and potential competitors are big banks or really well funded global startups that are operating, in most of the cases, not directly with the same positioning of this global bank solution for a Brazilian who lives in Brazil but needs to protect against volatility And we offer this FDIC insured bank account in the US that gives access to multiple sorts of payments and financial services all around the world. So no one has that exact approach, but many, many, many companies have products that compete or are building those products. Every single bank, if you take the top 10 banks in Brazil, they're all either offering one product that competes directly or working on launching those products. So, and I still think that what has helped us achieve what we have achieved so far is what's going to take us to our next 12, 24, 36 months, which is our ability to deliver and to execute. If you look at what happened with XP or with Nubank when they first came to market and challenged the industry, it's still what helped them, I think. Focus, ability to deliver a service, great quality, all that stuff, but their ability to execute. And when you keep executing at the same pace, especially in those early days, when your competitors, who of course they're bigger, they're slower, when they're reacting, you are already building something 1, 2, 3 years ahead of them. So what we have delivered this quarter, not only in tech, but it's something that we started building maybe 1, 2 years ago. The VIP lounge that we built from scratch at the airport here.
It's actually pretty cool, I want to say.
The first meeting that we had with the airport was in March or April 21. And we managed to launch it 2 years later in 23, February, March 23. And of course, followers can take advantage of the lessons you'll learn to try to find a shortcut. It's very hard for you to replicate. That's not tech at all. Like building, we built it, like the mezzanine there, we built it, everything. But in tech, of course, people can find shortcuts and replicate and copy some of the processes, features, services, products, all that stuff. But the fact that we are focused on building the relationships, understanding the industry, understanding the regulation, I think it's what sets us apart and really puts us in a more favorable position. And I hope it keeps helping us to over-deliver and to be ahead of the competition. The other part of your question, there are multiple things happening in the industry, right? If you're here in Brazil, you had some conversations about that. First, Pix and how Pix has transformed everything. But it's not only Pix, it's everything around the industry, and the infrastructure now drags to get out of its comfort zone, to really think about what are going to be the new rails to move money, not only domestically, but also internationally. And that's where we are. We are really operating in this cross-border arena, and not only what's happening here in Brazil, but also abroad, is what we believe has the potential to really transform where we are operating now. And I think the challenge is not to be a consumer as a company of what's being built, but to be an actor of that process. So to be helping build the foundations for what are the new standards, the new behaviors, and really driving regulators and different stakeholders to build what's going to be the next gen in terms of consumer products that help consumers navigate the global financial services ecosystem. So the infrastructure and the regulation are definitely the two pillars here that we believe are going to be transforming the whole industry. Pix, when we think about it domestically, has already created multiple changes, not only in payments, and you can see how it's enabling different products and services and transforming other parts of the industry. What happened in India with UPI, and everyone talks about Pix, and it's already bigger in many ways than the India system. But what is more interesting when you look at India is how not only the instant transfer solution changed not only the industry, the consumer, the citizens' uses and behaviors, but everything else. And it started with identity and how can you create a unified identity system And then there is the UPI, which is the PIX. And then there is impact on wealth and credit and insurance and many other industries and government in general. And here it's happening like there's PIX. And of course, we already see PIX-enabled credit solutions. And now we have DRAX, and then we're going to see different solutions as well. I think people are extremely excited, and they have to be about PIX. But when you start to understand what's behind the scenes and how that is a catalyst to many other transformative solutions that are coming to the industry, that's really exciting. And so the challenge is, how can we be actors and part of the process and not only consuming what's happening?
Amen to that. We're going to move to the rapid fire section. I'm going to ask you 5 short questions and I'll appreciate your immediate response. Let's dive right in. The first question is, what's one book or piece of content every founder should read and why?
The hard thing about hard things, because it's hard and you can't fight it. So you have to embrace it. And it helps you understand that the world is, I think, an utilitarian place with pros that are cons, with the success that are failures, and you're going to have to embrace it all.
You're throwing a dinner party and could invite any 4 people in the world, dead or alive. Who will be on your invitation list?
My family,
Okay.
as an entity, everyone. My family is huge. Who else? Wow, it's so hard. 3 more. I'm gonna speak whatever comes to my mind. Trump, because it's very controversial, and I really would like to understand what's behind his mind, because it looks at times crazy, but he's definitely not crazy to be such a strong personality. Anyways, also Ayrton Senna, I think he's an idol. When he passed, I was maybe 10, but it's still someone who drives emotions, and just a fan. And then maybe Elon Musk, also because of his strong views and personality, very controversial leader. But
definitely a person who makes crazy things happen.
yeah,
Like,
and
you can say all you want about his Twitter purchase or whatever, but endeavors that he managed to pull off are spectacular. What is the next billion-dollar business in Brazil nobody is building yet? Talking about crazy ideas.
yeah, maybe it's not that crazy, but biotech in general, I think is where there's still a lot to do. The Amazon forest is huge. And of course, there are some companies doing a few things. I just have not heard about a broader approach to leveraging biotech. There's carbon, there's
Hydrogen.
reforestation, but biotech more broadly, I still haven't, and definitely I'm not an expert, but I haven't heard a lot. And I think potential that we have there is huge. And especially with what's going to happen with the world, with chaos, geopolitics, all that stuff, I think it's going to be gold. So, yeah.
What was your biggest failure today and what did you learn out of it?
Biggest failure, managing the merger between ZAP and Viva Real. Definitely hard.
What did you learn out of that?
Um,
I mean, they merged, right? So it was not necessarily a failure.
I think personally it was when I had the clear understanding that I was damaging my mental health. So from a personal perspective, it was a failure for sure. I think the biggest learning there is that I would rather work with people who are deemed less experienced, but that you trust, rather than the experts or smartest or those who in their profile are the best individuals for a given role. And the learning is team cohesion trumps curriculum. Most of the startups are built by people who have little to no experience. If you take the first startups in Brazil, most of them built by people who did not have entrepreneurial experience. If you take the unicorns and company that I admire today, right, like Gympass, Quinto Andar, Nubank, all of those were built by entrepreneurs who had zero experience. So, and especially taking advantage of the connections that they built in the early days, I think that is critical. So, I mean, the main learning again is just working with people you trust is definitely critical for success.
If you were to give a public talk, but could not talk about tech or venture capital or financial services or anything related to your current role at Nomad, what would you talk about?
I will talk about my family. My mom has 15 siblings. My father has 9, so it's 16 plus 10. So it's a very, very interesting family from Minas Gerais. And I think it has shaped the way I think, it has shaped values, behaviors, all that stuff. And I think it's very special and very unique. So I would be talking about that.
15 siblings on the mom's side and 9 siblings on the father's side.
Yeah, 16 total, 10 total. Yeah.
So if you were to distill like one value, the guiding Northern Star for how your massive family operates, what would that be?
The value is the importance of family. It's really what it means, like the big family and how it's important for how you grow as a person. When I look at my mom taking care of her mother today and all of her brothers and sisters there supporting that process. When I look at my father and his mother, my grandmother, live in small farm, and my uncles and aunts and there as well. So it's it's quite interesting and it's very different from everything else. I think it just helps me value family.
Lucas, you are wonderful just as everybody described you, everyone who I talked to prepare for this conversation. And thank you for being with me today. And thank you for sharing tons of your experiences and approaches and learnings. I really, really appreciate that. Thank you.
No, thank you. And congrats on the effort that you put to making this happen on the research and everything. I felt really comfortable. So thanks a lot.